The saga continues for one of the biggest retailers on the market. Investor Beat starts now. Thanks for watching. I'm Mark Reeth. Quiet day for the markets as the Dow ticks up 0.25% and earnings season winds down. But don't worry, we've got plenty of retailers to cover today. Joining me in studio, Jason Moser, Tim Hanson. And guys, our top story today has been a top story for a while now. Penney is in the spotlight once again after announcing earnings yesterday. The retailer reported a loss of $2.66 per share, with same-store sales down 12%, which was actually better than the last quarter's same-store sales decline. But despite the so-so numbers, Jason, shares of Penney actually up 5% today. What gives?
Well, I don't know if there was really a whole lot to really look forward to with this quarter. I mean, certainly Ackman, I think, was on pins and needles with the announcement coming out. But, you know, I mean, you look at sort of the long-term numbers here with Penney. I mean, everything has been down. I mean, sales have been down, gross margins down, sales per square foot down, same-store sales down. And they are just stuck in sort of this conundrum of trying to figure out how to be relevant again in the retail cycle, and I'm not sure that they've necessarily figured that out. And with these sort of musical chairs they've been playing with leadership lately, I'm not sure that's going to be coming to light anytime really soon.
Now, speaking of musical chairs with leadership, it was Mike Ullman's first quarter as CEO. Not a very strong statement for this quarter.
It was generous of you to call it earnings.
That's a good point.
To call it results.
Now, is that his fault, or is that just carryover from Ron Johnson?
No, it was carryover, and they pulled no punches in pointing that out.
Yeah.
You know, one thing that they blamed was the decision by Ron Johnson to totally renovate the home goods sales, which people criticized in real time when he did that, because it's like, that's on the third floor of the store. You know, you should be doing something on the first floor to get traffic, but so that hasn't worked out. Although, you know, with the home market, you know, recovering, maybe it wasn't such a bad idea, but didn't work out for the company. And then, you know, basically they're undoing everything that they had done, which is why I think the stock is up slightly. And then Kyle Bass, who is a noted investor, revealed today, I think, that he owns a couple $70 million for the shares or something.
Yeah.
So some people are excited, but as Jason said, the trends are in the wrong direction for Penney, and it's hard to really see a scenario where they get that fixed in short order.
Yeah, it's back to school season now, and Penney has said it's starting to look encouraging out there. Are you very encouraged by Penney right now?
I'm not sure. I mean, as the father of two daughters who are in second and third grades, I mean, I'm not seeing much of a back-to-school bounce with us going there. You know, I mean, I think the question, instead of asking why isn't their home department doing well, I think you have to ask, why would it do well? When you have the competition out there like Wayfair, for example, where you can just go online and find anything you want. I mean, or Amazon even to a degree. I mean, they really have a lot of competition out there. I like that they're taking their business in the direction of online, but still by the same token, I think they're a little bit late to this game. So they've got a lot of ground to make up, and it just may very well be too late.
Now let's get to some of the day's movers and shakers. Home Depot reported its quarterly numbers this morning, and things are looking pretty good, with net income up 18% and same-store sales increasing nearly 11%. As a matter of fact, Tim, was there really even a downside here for Home Depot?
No, it was a great next stock. No, it was a great quarter. Everything was good from the sales, pricing, inventory management. You know, things are looking really good. The only thing investors should be worried about is the fact that the stock has run up really sharply recently and has gotten expensive. But from an operations standpoint, A+.
All right. Best Buy is also up today after reporting earnings, with profits coming in stronger than expected thanks to the company's trimming $65 million from its annual spending rate. That's good and all, Jason, but they can't keep that up forever, can they?
No, and I mean, just like Tim was talking about the Home Depot stock maybe running up a little bit, I mean, I think Best Buy stock is running up a little bit today, and investors ought to be very concerned about that, because really when you look at the top line of this company, it's been stagnant at best. So I mean, when you have a company that's faced with this sort of issue of trying to figure out how to grow sales, and the only way they can really improve profitability is just to cut costs, well, that's all fine and dandy, but at some point you can only cut so many costs. And Best Buy is going to run up into that wall, and from there, you have to ask the question of how are they going to improve? How are they going to improve from that point on? I'm not really sure how they do it. I would tell investors to be very aware of that from this point on.
All right. Urban Outfitters is up nearly 10% after reporting some very strong earnings today. But Tim, the stock's been on kind of a roller coaster ride this past year. So where do you think it's going to be, say, a year from now?
Well, it's funny, you know, this time last week, everyone was talking about how weak the consumer retail sector was after Macy's and Walmart reported weak earnings. You know, Urban Outfitters reported really good numbers. They've got a couple concepts like Anthropologie that I think are really attractive to, you know, demographics that you want shopping at your store. So I think what this says is that the U.S. consumer is doing reasonably well. They're being a little bit choosier than they have been in the past. And if you believe that, then in a year from now, Urban Outfitters, the company, should still be doing pretty well because, like I said, I think Anthropologie and Urban are pretty durable brands with very attractive consumer subsegments.
Last but not least, Barnes & Noble's is way down after announcing some tough numbers today, but the biggest blow was founder Leonard Riggio saying that he wasn't going to buy the company's retail stores. Jason, who wouldn't want to own a bookstore in this day and age?
Well, truth be told, I mean, I think that's really about their only out at this point. I still believe that their bread and butter, their focus on those brick and mortar retail stores is about their only out here, because when you focus on sort of the device and the digital content side of things, I just think their hand has been played, and we know that Amazon and Apple and even Google to an extent are going to beat them into the ground. They already are. What was interesting to me was in the call, it seemed like Barnes & Noble management was actually very encouraged by the fact that they could produce devices that consumers wanted, and they see sort of their specialty, sort of their advantage in being able to produce these devices. I'm just floored by that. So it makes me question really where management's sort of seeing this business going. They need to focus on their specialty, what got them there in the first place. Other than that, I think the Nook franchise is more or less cooked.
All right, that's going to do it for Tuesday. But before we go, Tim, what's one stock on your radar for this week?
I'm watching Dollar Tree, which reports earnings this week. If you believe the fact that the consumer is doing reasonably well and just being choosier and tending to shop at better operators, then Dollar Tree should have done really, really well relative to Walmart doing really poorly.
All right, Jason, what are you keeping your eye on?
Mark, do you have dogs?
I don't, actually.
Yeah, I do, actually. So as a pet owner, I always enjoy watching PetSmart and seeing how they sort of play things out here quarter by quarter. It's a wonderful concept because you can go in there and find virtually everything you want for your pet. The problem that they're running into is that folks like me, we're buying our dog food from Amazon. We're having it shipped to our front door. So then we're having to rely really on PetSmart only for their veterinary services, their grooming services. What they provide, they do a great job. But the problem is there are plenty of vets sort of at the front of your neighborhood and whatnot. This is a very fragmented industry. So while I think that they are doing very well with that, I'm very concerned with how they're going to be able to grow their sales in the stores. Be keeping an eye on their earnings here tomorrow, see how that's looking.
Okay, well, for Jason Moser and Tim Hanson, I'm Mark Reeth. Thanks for watching. We'll see you tomorrow.